Hello, Chart IQ users, and welcome back to this second episode of this GoNoGo educational series. We're going to continue to talk about trend following investments. I'm Tyler Wood, a CFT charter holder, and with me today is Alex Cole, the creator of GoNoGo Charts. How are you, sir?
I'm doing well, thanks. How are you?
I'm doing great. So this is a practical session. We're going to talk about the application of what we learned in our first installment, Trend Identification Part 1. Let's see how fund managers and analysts employ these tools in real time. Just as a refresher, we talked about one of the problems with technical analysis, and that is indicator overload. We want to avoid our analysis paralysis, our instinct to load up a chart with every possible indicator and squiggly line that there is, because it reintroduces a lot of the behavioral biases we're trying to get away from. And as we know, we want that composite approach. We want all of the information from these very valuable indicators, but we need to keep our focus on price action. So Alex, talk to us a little bit about the solution from GoNoGo Charts.
Yeah, so just as you said, we want all of that valuable information, but we've seen it a number of times how you can complicate your chart. And if anybody's watched any of our videos, you know that that's the problem, and that's what we try to counter with the GoNoGo trend. And what we've done is we've taken a disciplined checklist of trend following concepts, statistical measures that help identify the beginnings of trends, beginnings, ends, duration. And we blend all of that in the background and then are able to color code the chart according to the strength of its trend. So what you can see here is we've got a couple of different colors for our Go trends. Go trends, of course, being our bullish environment. We've got the weaker form aqua color, and the brighter blue is the strong form of the Go trend. And then on the flip side, we've got the no-go trend, which is our bearish environment. And those are, the weak form would be the pink and the strong form would be the purple. And in this way, we hope that we can give you all of that technical analysis that helps you with trend following, but keeps the chart relatively simple. We hope it's elegant, and of course, we want it to be informative.
Now, the critical piece of all technical analysis is keeping our focus on price. So with a very simple looking chart, you can pull out these areas of important support or resistance. And that concept of polarity we're going to talk about throughout this entire series, right? What has been resistance, once broken through, becomes support. We need to be able to recognize some of those classical pieces of the technical toolkit. And the only way to do that is with a simple chart. Now, the reason we feel price is the most important, right? When I went through the MBA program, it was entirely based around fundamental analysis and understanding companies and their operating capital and their balance sheet and their management teams. But as Mark Abraham tells us, ultimately, it is the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. And that consensus is revealed by analyzing price. What we're dealing with is not a game of blackjack, but more a game of poker. We are playing against a field of irrational investors. And being able to understand that irrational behavior that takes place in the market helps us understand why securities trend, why there are important levels that folks anchor to different prices, creating that support and resistance. So we are firm believers that fundamentals drive all those long-term trends, but we need to pay attention to the price action to understand what's going on with investors. So Alex, right back to you again. Let's review those colors on a GoNoGo chart.
Yeah, we want to throw this up here just to make it completely clear when we're looking at the charts going forward. Blue is our strong bullish environment. Aqua is our weaker bullish environment. Those are our two Go colors. Pink would be our weak form bearish trend. Purple, our strong bearish no-go trend. And the one we didn't mention, but we'll see a couple of these as we go through the charts, are amber bars. Now, that tells us that we're seeing some sort of uncertainty or neutrality. What it means is that in the back end, when we're running all these calculations, there's not enough criteria being hit, either on the go side or the no-go side, for the indicator to identify a trend. So we paint the bars amber. We say that that's a moment perhaps of uncertainty. We see those often in the transition between trends or in a period of sideways movement. Now, we call those the Go Fish bars. We keep it in theme, right? We've got Go, we've got No-Go, and we've got Go Fish. Go Fish, of course, because we're big fans of the life and works of Jesse Livermore. And he used to say that there's a time to go long, a time to go short, and a time to just go fishing when the market doesn't give you what you need to be able to make a sensible decision.
So let's take a look at a weekly chart of the S&P 500 and see how this worked in real time throughout 2022 and into 2023.
Yeah, so this is a longer term chart, but you can see how it pulls out the large correction we've had for most of that period. And then you can see when we turned around, and this has been the exciting part for most analysts this year. This has been a question. Are we in a go trend? Not everybody uses that terminology yet, but are we in a bullish market? Are we in an up move, or is this just a relief rally? Well, there was a lot of debate about that as we tried to break above prior highs and get past important levels. And you can see that the go trend was clearly identified after that one amber bar for the first time. And then we've now risen above previous levels that were resistance from prior highs. So on a weekly basis, it's now been a couple of months, almost 3 months of a solid go trend on the weekly chart.
Absolutely. We want to use that terminology, go or no go, as a pass-fail test, right? If we're thinking about NASA launching billions of dollars of equipment into space, they want all of the conditions to be optimal, right? To put probabilities on their side for a successful launch. The same applies to your investing. If you're deploying your capital or client assets into the markets, you want to make sure that probabilities are on your side. And that is the exact method that we're using with GoNoGo Charts. Now, if you remember from our first session, we talked about building a process and a checklist. This was a very simple process using some moving average crossovers and a couple of trend identification tools, as well as a couple of indicators on volume and MACD. Now, looking at that same time period for the S&P 500, looking at it on a weekly basis, how clear would your trade decisions be looking at this chart? Does the weight of the evidence scream out to you when to exit that trend and when to get back in? And what we know is that all of these tools are incredible, but it leaves a lot of interpretation and subjectivity in the hands of the individual trader or investor. So when we go back to our GoNoGo chart, looking at this on a weekly basis, our whole goal is to simplify the process, right? A simple process executed repeatedly is going to give you better outcomes long run. And what we can see is that it's 3 simple trades, right? We entered the S&P 500 after the COVID collapse. We got out at the beginning of 2022, and we've re-entered here in 2023, right? The most important thing is that we don't get drawn into these very seductive relief rallies. I remember feeling so hopeful that the end was already in and we were coming back into a rising US equity market. But that was not the case. And with trend following indicators, we have a lagging view, but we know that dependent on our timeframes, we can avoid over trading, we can avoid those seductive relief rallies, and we can just stick with the weight of the evidence, right? That composite blend of indicators that tells us probabilities are now on our side for the S&P in this new go trend.
Tyler, let me just comment really quickly because you bring up a great point. The ability to keep the weight of the evidence in your favor and not make those rash decisions is also super important on the way up. If you look at that move from after the COVID collapse, how many times did people think, oh, it's going back now, I should get out, right? And I think that's very, very critical for trend followers. And most of the money is going to be made in these long moves that persist. And if every time you saw a correction in the uptrend, you took profit or you got out, when would you get back in? How confident would you be getting back in at higher highs? Whereas in that whole period, you could have stayed in that go trend. And we built that weakness in with the aqua bar, showing it a little bit more weak form. But as long as those go colors hold, that trend is still in place. And I think that's just as important as not buying into relief rallies. Don't sell out necessarily of those pullbacks in an uptrend.
Excellent point. Excellent point for a trend following investor. Now, we've been looking at weekly charts, but we know from Charles Dow over 130 years ago, he specified to us in his writings in the Wall Street Journal about how the market moves in multiple time frames. And as an accomplished nautical pursuer of the seas, he compared the markets using this analogy of the oceans. And so this longest time frame, the primary trend, he talked about that as the tides of the ocean, unflappable. These are not human emotions reacting to any news of the day. This is the expansion or contraction of the gross domestic productivity of a nation, or the underlying fundamentals of the industries that we are investing in. And that's our primary trend. So we want to look at things on a long-term basis, even if our trading period, our holding period, is much shorter. This is going to be that moment to, when in doubt, step out and zoom out on your charts to understand what that long-term bias, the general drift of the market is. Now, he also talked about the secondary period being the waves of the ocean. And here's where a little more investor behavior comes into play. And that is the reaction to those fundamentals and that economic data. Do investors become overly despondent after a corrective move? Absolutely. We push prices down further than they should rationally go. Same thing at the top of market cycles. We have irrational exuberance, and we see that parabolic move in lots of securities like SPACs and cryptos. If you remember 2020 and 2021, everybody had a SPAC, and that irrational exuberance can take prices out to extremes. Now, that tertiary period, the third time frame that Charles Dow talked to us about, he called the ripples on the surface of the water. And there are a lot of technicians that can make money repeatedly in those very short intraday timeframes. What they're doing is looking at the reaction to news of the day. They're looking at pure investor behavior. And what we know about that relationship between the secondary and primary trend also holds to our tertiary or our minor trend against that secondary period. So as an analyst, you need to go through markets looking at multiple time frames to make sure you understand the general direction of the market and what time frame you are playing in. Now, a great technical indicator is going to work the exact same way on multiple time frames. So let's just go through a couple examples, Alex, with the chart of Apple.
Yeah, so this, of course, starting at the very, very long term, decades-long chart of Apple. But look at how clearly your traditional technical analysis can be applied if you don't have line after line or panel after panel on your chart, trying to give you a sense of that trend. We've got the trend. We know the trend is in place. We see that it is a go trend this entire time. I mean, what a trend if you'd have bought Apple a couple of decades ago. But each time you see as Apple breaks to new highs and then pulls back, it seems to be supported at prior highs. And that's that concept of polarity that you mentioned at the beginning. And you can see that so clearly. You've got the pullback and often on those aqua bars, right, showing some weakness. But then you find support at prior highs. And that happens over and over and over again through this trend. So there's a couple of things to note here. One, the ease of using traditional technical analysis, looking at support and resistance levels, the market dynamics underneath the chart that help you with finding those key areas of support and resistance. And two, how the go trend was in place through that whole time. So using a trend identification checklist such as the ones we've talked about before, or an indicator like this that shows you the trend is still in place. Those pullbacks on a monthly basis could obviously be very, very long, but you've stayed in the trend for the whole time.
And with respect to multiple time frame analysis, right, you might not be trading monthly bars unless you're a sovereign wealth fund or a pension fund. Your time frame might be shorter, but looking at a larger time frame chart can help you identify those key areas of support where you might want to look for entry points. So we can jump down to a weekly basis, Alex, and see how that no-go trend in 2022 came down to test that prior support.
Yeah, absolutely. And that's an example of that monthly trend being in a pullback, right? Which could be a year or 2 years. And of course, as you said, unless you are investing for the super long term, that wouldn't be palatable for most people or for clients. But you can use that long-term trend to say, okay, we are in a long-term go trend. Let's look for opportunities to enter the trend on a shorter time frame. And so this is the weekly chart. You can see that we've been in that no-go trend for that period there towards the right side of the chart. But now we are back in a go trend. So now we say, okay, long-term trend is still up. Let's look to enter perhaps on that new go trend. What's also of note here, Tyler, is that we found anecdotally that color change happens often on important breaks of key price levels. And so we like to see that confluence of events. Your go trend is in place. You're able to draw that upward sloping trend line throughout most of the left side of that chart. And then when that trend line is broken, we see the changing color out of the Go trends. And so that adds some confidence to our opinion that perhaps that trend is now over. And then you can see on the other side, the downward sloping trend line as we stay in no go and amber bars. And then finally, when that's broken, it's broken with a go bar. So that adds a little bit of weight to our opinion that perhaps now that no-go correction is over. You can see that on Apple on the weekly chart, we're trying to break above prior highs. So we'll be looking to see if we can consolidate above those levels going forward.
Absolutely. So we're talking about the fundamentals of the company, right, over this multi-decade chart. Obviously, an innovator in the space and a strong company to invest in. When we look at the weekly basis, we can see some of our classical technical analysis jumping off the chart to us. And then we might step down a time frame. And for most of us, trading on a shorter period makes sense for clients as well. So if we're looking to actually take trade decisions on a daily chart, now we've got the weight of the evidence in our favor from multiple time frames. On a monthly basis, it's a strong go. On a weekly basis, we're in a strong go. And so we might take entries on the daily, right, to optimize our entry points and to buy into any of those pullbacks when we can see that the longer time frame is indeed in an uptrend. So this is a daily chart of Apple. The tools work exactly the same way, no matter what time frame you're looking at. And here we're in a strong go as well on this daily basis. And of course, no security moves up in a straight line, right? Multiple pullback points. And I think the important element that you called out earlier, Alex, is for trend following investors, buying the dip is part of the strategy. It's not just for TikTok traders, right? We want to see an established trend. We want to see resurgence in the direction of that underlying trend. And of course, when we see these pullbacks, that's an opportunity to add to our position size or even to enter a trend that we had not been in previously. But we can continue down the time scale. We can look at Apple on an hourly basis. And here our final bar on this chart is in that amber neutrality, right? All of the composite indicators in the background have fallen to their neutral level, and we have a moment of uncertainty. This is also coinciding with us reaching those prior highs, an area of resistance or overhead supply, and we're seeing it contract, pull back from those levels. So on an hourly basis, right? Again, this is very short intraday time frame. We're seeing that security pull back a bit. Now, a re-emergence into the Go trend colors might be the opportunity to add to positions and secure that trade. Alex, you wanted to go one step down?
Yeah, just because we know that there are people using the markets in many, many different ways, and you could be fading a move higher in price, right? If you're a very, very short-term trader, you could be looking to maybe scalp to the downside. We know that that's the possibility as well. And also you could be working with a portfolio manager who has a trader who's been tasked to purchase a position in Apple, let's say. Well, he's not going to buy it if the very, very short-term trade is a no-go. He's going to wait perhaps until it makes sense and it turns around and becomes a go again. So this is a 1-minute chart. Obviously, this is an incredibly fast-moving chart, but just to demonstrate that technical indicators and technical analysis work across all time frames, and as we'll see later, all asset classes as well. But this is a 1-minute chart of Apple showing that the trends do exist. It's fractal, right? We know that is part of technical analysis, and we can see that we have been in a very strong downtrend on the 1-minute chart, right? So we're going to see what happens next and if that holds, or if we go back into Go colors, which would provide a trader or a super short-term person an opportunity to go long.
Absolutely. Now, we've been talking about equities. We've been talking about the index level and a couple examples with Apple. But we know that technical analysis applies across any liquid market. So all asset classes can be used in the same way. And indicators that work on equities should work on currencies and fixed income and commodities and cryptos and everything else. Now, we originally learned all of this from the great John Murphy, a fellow CMT charter holder. But we've also studied a lot of the works in the CMT curriculum from folks like Marcos Katsanos, who helped identify some of those correlations and quantified what the relationship is across the asset classes. So even if you are an equities only trader, I would encourage you to take a look across the asset classes for those important intermarket relationships. And we saw all of this playing out in 2022 with a sharply rising interest rate environment, collapsing, and then incredible strength in the US dollar. So Alex, why don't we take a look at some GoNoGo charts around the horn and across the asset classes to see how we could do this very simply.
Yeah, and of course, if you are an equities only person, of course, with the ETF world now that's just so diverse and deep, you can take advantage of those movements across asset classes using ETFs. And so what we've got on here on the top left, we can do a quick round the asset class analysis, and we can see that equities are in a strong go. That is the bright blue bars there that you see. Treasury bond prices is the next one. You can see that treasuries are in a no-go. Now, remember, treasury bond prices will move inversely to yield. So we know that we've been in an elevated yield environment. So that makes sense that bond prices are depressed. Of course, then we can move over to the right and we've got crude oil. Oil has been in this meandering long-term downtrend, for quite some time. And that's still the case. Oil in a weak no-go at the moment.
These are all weekly candles. So we're looking at longer charts.
Weekly charts. Yeah, you can see Bitcoin on a weekly basis is in a go trend again, but in a bit of a pullback. That's one of those moments. It'll be interesting to see if we can stay in that trend. Gold, of course, in a weak go as well. We've seen gold struggle on the daily chart. You can see it fall away from those highs there, but on a weekly chart, it's in a pullback and it's in a weak go. And of course, the dollar, which was the strength for so long, and it was an amazing run, that has been in a no-go, and now a couple of go fish bars. So we're waiting to see what happens here. It's clearly failed at that last high, but amber bars now showing some uncertainty in the markets for the dollar.
Absolutely. Now, if you don't have the time or the patience or the interest in doing a ton of cross-asset analysis, one of the things that Alex and I did from the very start of our company was subscription research to our institutional clients. And what we're doing is taking a top-down approach to the markets. We do 2 weekly pieces, one on Monday pre-market that we call Flight Path, trying to get a sense of what those longer-term charts are telling us about the markets, the characteristics between the asset classes, and then drilling into the sector groups within the equities markets and concluding with some individual names. Then on Saturdays, we'd like to practice what we preach, and that is to step away from the anxiety and the emotions of the trading week and instead look at some global macro charts on a longer-term basis to get a sense of what the market is telling us. We call that launch conditions, and that large chart pack comes out every Saturday. So if you are interested in learning more about that, please feel free to shoot us an email, info@GoNoGo Charts. Thanks for being with us on this second installment of this multi-part educational series from GoNoGo Charts. Until next time, trade them well.